This video is about what's going to be happening in the next 6 weeks. All of us talk about the tariff confusion and the tariffs that are on again, off again, and what effects those are going to have. That doesn't hit you yet other than theoretically. We've been talking about it, it's on the media, but you don't go to the store shelves yet, or to the Walmart and the store shelves are bare. That's coming up. In the next 6 weeks or so, we're going to start to see the results, the actual real world results of all of this confusion. And the global supply chain is actually locking up because of this. And if you run a business, you never make decisions for marketing, hiring and firing, research and development until you're more certain about the way things are all going. And there's so much uncertainty right now that no business is able to make the right decisions yet because we don't have enough information. And of course, also, we're going to start to feel the effects of the counter tariffs. There's a lot of ways that these counter tariffs are going to be hitting us, that we're about to feel that and start to see the first signs of the serious first signs of it over the next 6 weeks. Everything's going to happen in the next 6 weeks as we roll through May and into the summer. And if there's a time that you want to sell in May and go away, it's this year for sure, and you should already have been sold. You should be in high quality precious metals mining stocks, high quality oil production stocks, not exploration, and some cash and pretty much nothing else. Maybe a little bit of lithium and uranium because they're both so unloved right now. But you're going to want to be in very few things, and you certainly don't want to be into the blue chip stocks. This major stock market meltdown is here now. We are in it right now. Just as in 1929, they were in it for months before they realized. We are in the meltdown now, and there's a chance that we could have a dead cat bounce, a recovery bounce. They have ways to do things, printing more money, lowering interest rates. They can manipulate stuff, and that'll give the markets a temporary boost, but it'll be a temporary boost. Ask yourself, where do you think everything's going to be 1 year from today? Plan for that, make the decisions based on your beliefs, and live and die with the results. Now, I was thinking that the tariffs might be inflationary, but there's a lot of arguments for why they aren't inflationary per se. However, I was thinking about that, and it doesn't mean that if you have tariffs, that you're immune to inflation. And I believe that there's a lot of forces pushing inflation higher independent of tariffs. And the fact that we're having tariffs at the same time, we will see inflation increase while we have tariffs. The thing that happens with tariffs is that people make different buying decisions. You see something for a Chinese swimming pool for $20 and it's $90, you say, forget it, I'm not going to buy that. I'll buy one of their competitors made in America. So you look down the store shelves and it's just bare except for 4 or 5 other Chinese competitors. And all the pools are now $70, $90, and they used to be $10, $20. And so you just don't buy anything. Your kid goes without a swimming pool. You see an overall decline in the velocity of money. That's the amount of time that a dollar is used as it passes through the economy. So if you pay a guy to paint your wall, he takes some money, he goes out to dinner, and he pays the waitress. She takes some of that money, goes home and buys a TV. That's a velocity of 3. What you see is the velocity of money, which is already completely slowed down, which to me, this chart of the velocity of money shows how exuberant we were when we were spending money that quickly, because when you lower how much money you spend, you find that you don't really miss a beat once you get used to it. So same thing with recession. As everything slows down, velocity of money slows down, the economic activity slows down, you're going to see pressures against inflation. And a lot of times, tariffs and recession and slowing economies come together. So you see a lot of times that tariffs don't cause inflation. But in this situation, I believe that tariffs will not be the cause of the inflation, but that we will have massive inflation regardless of tariffs or not. But the point is that we're not making anything here yet. That will take many, many years to get to that point. So when you're not buying the Chinese swimming pool, you buy nothing. Or if you buy something, you buy one of the Chinese swimming pools, but the shelves quickly get bare, especially for stuff that's not yet subject to the tariff or the increased price. You're seeing this with automobiles right now, where everyone's trying to buy things ahead of the tariffs. And when those kick in, apparently no one's going to buy anything. But when there's a limited supply of manufactured goods or products for sale, that causes price competition, and that causes prices to rise, which comes across as inflation. And at the same time, you got way more US dollars coming home to roost. China, Japan, Canada, 3 of the top 5 creditors to American debt are selling or releasing a lot of their US treasuries. When we say let's pay for soldiers and schools and debt servicing costs and buy more military and space programs, etc., the thing is we only have enough money to pay for half of that. So we say, well, where are we going to get the other half? And you either create the money or you sell it to other nations. You can sell it to American citizens too in the form of bonds, but you could sell it to other countries. So Japan might say, or China might say, yeah, we'll give you $100 million. You give us $100 million of US bonds and they have a value and they're secure, etc. They used to be. They're not so secure anymore. Because these countries are not only not buying our debt when we need them to, like they have for 50 years, they're actually selling or lightening the load. So they have a whole bunch of U.S. treasuries and they roll those over so they don't buy more, and they can also sell those or release them to the market. All of this is just a statement of, and the same when the stock market went down and bonds declined in value at the same time. Very rare, very bad signal. It's all saying the same story, which is that there's an exodus out of the American dollar. Trust and confidence in the US dollar is declining worldwide. And it's a unique situation right now where some nations are looking for ways to strike back against Donald Trump because they don't like that he put tariffs on their country. But as they release that money into the wild and it eventually finds its way back to American shores, that will stoke inflation by the point when it gets here. But that's not for quite a long time for it to absorb back into our economy. That will take years. But with these completely seized up supply chains, you're going to start to see, because they're stopped, but no one's recognizing it yet because it hasn't really impacted you directly. It'll just happen one day where all of a sudden everybody goes to the store and you're all talking to your friends about how there was nothing on the shelves, where the prices were ridiculous. But these supply chain concerns, even if they're just theoretical, people are talking about it, like me on this video, or in the media they're talking about it, people will front run that and they'll get scared like they did with the toilet paper debacle that we saw last time. People are going to hoard things. They're going to go and buy as much as they can just to have it. And that results in even more supply limitations or empty store shelves. And as you know, besides the empty store shelves, there's also empty savings accounts. There's more families concerned about finances now than ever. And the thing is that, unfortunately, I know I'm the bearer of bad news, but it will get a lot worse to the point where you'll regret not being back in this time now when you felt financially strapped. But this recession I'm talking about for a while, it's being delayed. A little bit of artificial stuff, but also I was early, as I always am. But the recession is 100% coming here, and it will result in double-digit inflation, double-digit unemployment, double-digit declines in altcoins prices, multiple double-digit declines in the stock market. So not 10%, I'm talking 30 or 40%, maybe more. I don't know, it doesn't matter. The point is that you step out of the way with the stocks I told you own, and they're doing tremendously well, by the way. And secondly, they're about to do tremendously even better when these next round of financial results come out. The numbers just keep getting tremendously better. And a lot of these stocks that I like, that I tell you about in my personal portfolio and in the newsletter, are about to have some of their best performances yet ahead of them. That doesn't apply to gold. Is gold's best performances ahead of it? Maybe. It doesn't matter. Gold's not going to have any performance. It's just about how the fiat currencies go and oscillate around gold. Gold sits there like a big brick, and then it takes $100,000 to buy this piece of gold, or this amount of gold. And the next day it costs $200,000. You say, wow, gold's gone up in value. No, it hasn't. The US dollar has declined in value. But you're going to see even more US dollar declines, double-digit declines in the US dollar. You're going to see double-digit unemployment for certain. Not a doubt in my mind. It's a question of when it gets here. It's on the way. I'm not trying to time anything here. I'm just telling you. what's going to happen. So then, and here's the good news part. So then you get margin calls, a currency crisis, panic selling. And this is the good news, because also what do you get? Insane opportunities, like insane opportunities. It'll be so much better than you think. And it's going to suck because, it's the world. But you might know someone who has an asset worth $500,000 and they'll sell it to you for $125,000. I'm talking like that kind of deal all around you in your personal life, not just stocks. I'm talking about properties you could own, artwork, assets, rental income properties, real estate, all this stuff, fancy boats, fancy cars. People will want to get rid of their Rolex watch because they need the money and you're not hurting them. They made the bad choice when they overpaid for a thing that was a luxury item when times were good. Times are bad. People are desperate. They're going to be getting rid of valuable things for pennies on the dollar. Just keep your eyes open to it and have some cash on the sideline if you can. And once the margin calls kick in, the unemployment rate spikes and the economy is doing very badly and the supply chains are seized up, money's coming out of cryptocurrencies because people have a margin call or they need it to pay their bills. For example, money will flow out of a speculative asset. Even if the asset's future is much greater, it doesn't matter, because when people are under pressure, they're not going to think about that. They're not going to care about that as much. They're going to take money off the table to pay for things now. And as always, out of this commotion, there's very few big winners. And that's what my newsletter is all about. I'm telling you, well, here are the winners. Here's the needle in the haystack, because this haystack is already on fire. It's going to go up, and things are going to be different for everybody 6 months from now. But watch what happens in the next 6 weeks. And if you want to keep me in your pocket, you can get the Peter Leeds app at my website, or you can become a Peter Leeds insider if you want more from me and have direct contact with me, plus a special newsletter. Or, of course, our most popular top thing that we've ever done, we've produced for almost 3 decades now, is the Peter Leeds financial newsletter for low-priced, high-quality stock picks that are set to increase in price very soon. If you're hanging out here with me, you're not looking to make 10 or 20%. If you're hanging out here with me, you're looking to make a meaningful difference in your life, change things, have plenty of cash to help the people that you care about, and maybe yourself sometimes too.